Good morning, ladies and gentlemen, and thank you for standing by. Further to the disclosures lodged on the Australian Securities Exchange this morning, welcome to the Rural Funds Group financial results presentation for the half year ended 31 December 2020. My name is James Powell. I'm joined today by David Bryant, Managing Director, Tim Sheridan, Chief Operating Officer, and Daniel Yap, Chief Financial Officer. For your information, all participants are in listen-only mode. After the presentation, there will be a question and answer session. Please feel free to type your question in the questions field during the webinar, and we will address these at the end of the presentation. Please also be advised that the webinar, including Q&A, will be recorded. I'll now hand over to the first speaker, Tim Sheridan. Tim, please go ahead.
Thank you, James, and good morning all. I'll now commence with an overview of the half year 21 financial results. Last year, RFM outlined a strategy to develop 5,000 hectares of macadamia orchards over a 5-year period in central Queensland. The Mary River, pictured here, provides irrigation water to properties acquired in Maryborough as part of this strategy, which I'll now discuss further. As described on the left-hand side of this page, during the half year, RFM secured a number of assets for the Macadamia Orchard Development Program. In November 2020, RFF acquired over 5,000 hectares of land, currently sugarcane farms, and water entitlements located in Maryborough. Throughout calendar year 2020, the fund acquired 5 properties with access to the Fitzroy River west of Rockhampton. And in December 2020, RFF entered into contracts to acquire 21,600 megalitres of water entitlements that will be available from the Fitzroy River upon completion of the Rookwood Weir, which is estimated to occur in 2023. With the benefits of these natural resources, RFM has begun the development of 500 hectares of macadamia orchards in the current calendar year. The initial acquisitions and development costs will be funded in part by the proceeds from the sale of the Almond orchard that was completed in December 2020. From January 2021, the group's guaranteed provided 2 JBS for cattle housed in feedlots, which JBS leased from RFF, will be increased by $17.4 million. This increase will provide additional revenue to the fund. During the period, no rent relief has been requested by lessees as a result of the COVID-19 pandemic. As stated in the final bullet point of this slide, RFM confirms the full-year AFFO and distribution forecasts. In addition, RFM has today announced FY22 forecast distributions of 11.73 cents per unit, an increase of 4% in line with RFF's distribution growth target. Page 6 of the presentation details the property transactions just described. The green bar on the left-hand side of the chart shows the disposal of the Almond orchard. The adjacent grey, blue and light green bars illustrate acquisitions of cropping properties, being the Maryborough sugarcane farms, cattle properties and properties earmarked for the development of macadamia orchards in the near term. Additionally, capital expenditure and revaluations are also factored into this chart. Notably, during the period, an independent valuation increase of $7.1 million was recorded for the cattle property Rewan. The bar on the far right of the chart shows that adjusted total property assets at the end of December totaled over $1 billion as a result of these movements. Page 7 of the presentation details income, earnings and balance sheet metrics for the group at the end of the period. Consistent with prior forecasts, RFF recorded a reduction in property income during the half as a consequence of recycling capital primarily from the sale of the poultry assets into the macadamia developments. The macadamia developments are expected to add to property income in future years. Earnings of 17.3 cents per unit were generated during the half, representing a 94% increase compared to the prior period. The higher earnings were driven primarily by the gain from the sale of Morale. As footnoted on this page, for taxation purposes, the capital gain as a result of the sale has been partly attributed to the December 2020 distributions, with the remainder expected to be attributed to the remaining FY21 distributions. The adjusted net asset value of RFF units increased by 4% to $2.01 per unit as at 31 December. Gearing remains at the lower end of the target range at 30.2%. The cash generated by the group, which is measured by adjusted funds from operations of 6.6 cents per unit, is on track with full-year forecasts. So too are distributions. RFM is pleased to confirm current full-year forecast AFFO of 11.7 cents per unit and distributions of 11.28 cents per unit. Finally, FY22 forecast distributions of 11.73 cents per unit are announced today. Looking now at the debt facility and interest rate hedges. As included on the previous 2 pages, the assets of RFF now total over $1 billion, which has necessitated a larger debt facility, being $380 million at the end of the period. As at 31 December, 57% of debt was hedged. Therefore, falling interest rates continue to benefit RFF's debt funding costs. The total cost of debt was 3.2% for 6 months ended December, down from 3.7% for the prior period. Finally, the tenor of the debt facility was recently extended, with a future expansion of the facility likely as the Macadamia developments progress. I'll now hand over to David Bryant to provide an update on this program.
Good morning, ladies and gentlemen. It's David Bryant speaking. Pictured here is a nursery acquired by RFF in May 2020. The young plants seen here are some of the 185,000 trees that will be planted by RFM for RFF's Macadamia developments in this calendar year. The nursery and the plantings that they supply form an important part of the fund's expansion over the coming years. A total of 500 hectares of macadamia orchards will be established in 2021, funded in part by the disposal of RFF's poultry assets and the Morale Almond orchard, which was sold in December. Both the poultry farms and the almond orchards are examples of RFM's experience in developing productive agricultural assets, creating value through cash flow positive and profitable operations, and then crystallising that value via an asset sale. The pictures on the bottom of this page show that RFM's development expertise spans over 2 decades, with the centre and right-hand photos recording the early days of the establishment of the poultry and almond assets. We're now moving to repeat this process in the macadamia industry. Accordingly, key RFM operational staff, some of whom worked on the development of the Morale Almond orchard, have relocated to central Queensland to oversee the macadamia developments. As shown in the map, land and water acquisitions are materially complete, with assets in Rockhampton, Bundaberg and Maryborough. This means that we've now the natural resources in place to develop up to 5,000 hectares of macadamia orchards, plus many thousands of hectares of land suitable for cattle production. Natural resources that RFF will now harness. The completion of the Rookwood Weir, scheduled for 2023, will facilitate the supply of 21,600 megalitres of water to the Rockhampton properties. In the meantime, RFM will establish the first orchards at our other 2 regions, Maryborough and Bundaberg. The images on this page show works that have already commenced, with the conversion of 2 cropping properties pictured here at different stages. The bottom picture shows a laser bucket which is using GPS technology to precisely level the block prior to planting. Accuracy at this stage of the development will result in efficient drainage for the orchard, providing the benefit of early access following rain events and uniform soil water moisture to maximise tree growth. The top picture shows tree planting with grafted macadamia trees being placed into rows that have been prepared with cultivation and irrigation systems, ready to supply water to the new trees when needed. The trees for these plantings were sourced from the nursery owned by RFF. As the output of the nursery is expanded, the developments will be accelerated or can be accelerated in future years. The development of this initial 500 hectares is within the financial capacity of RFF and are designed to demonstrate the orchard's scale and quality that RFF can provide to prospective lessees. Discussions with potential lessees are progressing satisfactorily, which makes us confident that we will soon have a lessee for this year's developments. RFF will generate additional income from properties which are not immediately required for the development. Discussions are currently occurring to lease several of the cattle properties in Rockhampton. In Maryborough, approximately half of the sugarcane properties are already leased, and the remaining properties will be cropped by RFM. This approach is intended to provide higher returns and more flexibility in rolling out the macadamia developments. This is an exciting stage for the Rural Funds Group, and we look forward to continuing to provide updates as the developments progress. The rationale for undertaking the developments has been previously articulated, but it's worth revisiting. Macadamias have been a very good investment for RFF, but represent only 2% of the current portfolio. The developments planned for RFF will further diversify the portfolio with additional lessees, an increase in allocation to the Northern Climatic Zone, and a reweighting of sector diversity. Macadamias are also consistent with RFM's strategy of investing in sectors in which Australia has a comparative advantage and sells into global markets. RFM's view is that these sectors are more sustainable and less volatile than commodities for which Australia does not possess a comparative advantage or only produces for domestic consumption. Importantly, as lessees are secured for these assets, they will add to the existing revenue generation and the weighted average lease expiry profile. The current WALE, or weighted average lease expiry for RFF, is 11.1 years. Whilst the focus of the presentation today has been on the macadamia development strategy, productivity improvements continue on many of the other natural resource assets within RFF. As an example, Comanche, a cattle property on the Fitzroy River and pictured on the screen, has benefited from the planting of a forage crop supported by the installation of a new centre pivot irrigation system. These improvements seek to increase the assets and benefit the productivity of the assets and benefit RFF via increased earnings. A summary of these types of development activities are included in the appendices. I'll now hand over to James to conclude today's presentation and commence the Q&A. Thank you.
Thank you, David. As noted, we will shortly commence Q&A. If you have a question which you would like answered, you can type it into the questions field or alternatively use the raised hand function. In summary, the financial results presented today reflect a good portfolio of assets with a good track record of performance. Specifically and notably, distribution growth of at least 4% per annum, which is in line with RFF's stated target. The transactions completed over the past 12 months have secured RFM's ability to commence the rollout of 5,000 hectares of macadamia orchards, with 500 hectares planned for the current year. RFM can confidently commence the developments, drawing on the existing balance sheet capacity and earnings generation of the RFF portfolio, and has today announced FY22 forecast distributions of 11.73 cents per unit, a 4% increase on FY21. This concludes the formal component of today's presentation, and we'll now pause for a moment while participants type their questions in, which we will receive and answer shortly. I'll now hand over to David Bryant for the first question, which is in regards to the target weighting for macadamias.
Okay, it's David Bryant speaking again. The first question is, what is our ultimate target weighting for macadamias? Just refer you, I think we've brought slide 13 back up, which shows the sector weighting on the left-hand side. You can see at the moment we've got a pretty heavy concentration in almonds and cattle. The objective with that macadamias is to actually dilute that concentration, increase the diversity of the portfolio. But it's dependent upon, of course, lessees, and as I said in my presentation, that those discussions are going satisfactorily. But over the coming years, we will need to sign on additional lessees. But I'd anticipate or aspire to getting the macadamia allocation to 25% of the portfolio. It's an industry where Australia is a world leader. We have a comparative advantage in production, and so the economics of the industry will always, well, I believe, will remain very attractive. So that 25% is the short answer. The next question associated with that, or from the same questionnaire, was what is the target cash yields on cost? And what is the yield that we would expect to receive on an investment like this? I suppose that it'd be in the range of 6 to 9%. And the reason why I'm providing a range is that we keep lease rates commercial in confidence for the benefit of both the lessee, but also for the benefit of RFF as we talk to a range of lessees about a range of possibilities. Okay, had another question about macadamias, which is how long does it take for a tree to produce nuts? You can actually get nuts off the trees in the third year, but it's a very small crop. It's a tough industry to go into, and the reason for this is it takes about 8 years for the orchard to turn cash flow positive. But if you recall the first slide in my presentation, there was a nursery. It takes 2 years to produce the actual planting material. So really what you've got is a 10-year project. So it takes a lot of planning and a lot of investment. And that's actually a barrier to entry, which is actually a very attractive attribute for RFF, because RFF has the financial capacity, and its business is actually providing financing arrangements and developing orchards, long-term investments for other businesses that may have shorter-term priorities. So we think that attribute, or that long duration for the establishment of orchards, is actually a very attractive thing. The next question we had was just regarding lessee performance over the period. We made a comment in the presentation that no rent relief was sought. Were there any concerns raised by lessees at any point during the pandemic? No is the answer. Our lessees are producing food. I think the results from the supermarkets actually over the last couple of days is a pretty good indication of what happened to food during the pandemic. People stayed home and bought a lot of it and ate a lot of it. But yeah, so our lessees have sailed through the pandemic very well. There's a question about the current trend for pricing of macadamias. Macadamia prices are they're quite high. We would expect them to come off a bit, and they probably have started to come off a bit. And it's interestingly, it's because macadamias are often a snack food that are purchased perhaps, say, at a convenience store or a service station, and people have travelled less, have been out less, and there's been slightly reduced sales through those channels. But nevertheless, macadamias are priced more highly and valued more highly than any of the other nuts. We would expect that that position will remain because of the attributes of the nut. And there's a fair bit of commentary about that in the last newsletter, and I'd refer people to that newsletter to get some more information on the macadamia, the attributes of the macadamia industry and why it's so attractive. Another question about pricing for cattle, the outlook for cattle prices. Cattle prices are very high at the moment with the good season being experienced in Australia. So you're seeing an increase in the value of breeder stock as farmers or cattle farmers seek to rebuild their herds. And the prices being paid for cattle, for breeding cattle at the moment, are unprecedented. They are probably, I'd say about 30 to 40% above long-term recent averages, which are pretty high too. The important thing to keep an eye on is actually the price for beef as opposed to cattle. In other words, the finished product, the product that's being consumed. And again, beef prices, Australian beef prices are very high, and that's because the Australian beef is very much in demand in our overseas markets. It's viewed as of the highest quality of beef. It's very attractive to our customers, our trading partners, and that's supporting prices. And we're seeing evidence of that price support and that confidence, particularly with the increase that we've had with the JBS facility. They've got more cattle on feed, processing more cattle, so the industry's enjoying good times. I'll just hand over to James with another question.
We have a few more questions that have come through, and some people with raised hands, so we'll get to those with their hands raised shortly. But I'll hand over to Daniel Yap now for a question on the tax implications from the morale sale, and after which he'll hand over to Tim Sheridan to provide a response to a question on water entitlements. Thank you, Daniel.
Thank you, James. As noted in the presentation, there has been a capital gain as a result of the sale of the Morale property from both an accounting and tax basis. For tax, the capital gain is added to the income component of the distributions. This gain for the current year is in excess of the amount of the cash distributions. The capital gain will be attributed to 3 quarters of this year: the December distribution that was paid and the next 2 distributions. This, however, may result in an increase to the tax cost base for certain unit holders in RFF, which means that when these unit holders dispose of units in RFF, a lower capital gain will be realised. We will be providing more information on this topic and will publish this on our website. I'll now hand over to Tim.
Thank you, Daniel. We've had a question come through about the temporary market for water entitlements and also the permanent water entitlements. Due to recent rains that we've experienced, the dams, the storages have refilled, and we've seen the water allocation significantly increase. As a result of that, the temporary water market has come off quite somewhat. I think it's probably come off from $500 a megalitre to about $50 a megalitre. Fortunately for RFF, all of our temporary water was sold in the prior half, and we did achieve those higher prices. So that the revenue from that is included in the half year just gone. In relation to permanent entitlements, so the actual entitlements people hold forever, we haven't seen much movement in that. Those tend to keep growing in value as new almond plantings and the like occur, but the temporary market does fluctuate year on year based on seasonal conditions.
It's David Bryant here. I'll just add to that the amount of temporary water that we hold is quite marginal, so that that movement in prices as they go up and down has only a marginal impact on earnings. I've got another question here. We've got James Druce on the line, and he's going to ask a question over the system. I'll just one moment, James Druce, while I have somebody give me the thumbs up so that you can. Okay, you're right to go, James.
Hi, David. Thanks for your time. Just looking at your real prepared comments around the 500 hectares that you're developing. Sounds like you have a lessee, or you're close to signing something with a lessee for that. Can you give a sense around timing and how that lease is structured? Will you be getting income from day one, or is it more in line with the cash flow of the orchard?
Okay, thanks, James. Look, as I stated, the lessee negotiations are progressing satisfactorily. If they were progressing unsatisfactorily, I would say that, but that's not the case. As to timing, I would anticipate that we would be signing a lessee this calendar year. The timing of cash flows, and this actually leads me to assist answering another question. So associated with your question, James Druce, is another question, which is, will the long lead times for developing macadamia orchards hold back our earnings growth as we ramp up macadamias? So all of our leases will be struck on the basis that lease payments are paid from day one, based on the amount of capital outlaid. And in time, we would expect that we would review the value of those orchards to market as is appropriate and as occurs with all our other assets. So what that means is that it will not hold back, these long development lead times will not hold back earnings growth. We will see steady earnings growth as capital is invested in developing these natural resources. So at this stage, it's 500 hectares for this calendar year, and subject to lessees and subject to financial capacity, we would expect to then start another round of development in the next calendar year.
Okay. Can I have a follow-up question, if I may, or one or two more?
You're right.
In the past, you've also talked about getting up to 1,000 hectares in a relatively short order. Should we be thinking about another 500, in 24 months' time, or do you think things can ramp up a bit faster than that?
I think another 500 hectares next year is, well, certainly logistically it's achievable. We could ramp up further than that, but that would be subject to demand from lessees. So the nursery that was pictured before, we've expanded that, and so that the capacity is being put in place to ramp up further than that. But at this stage, the assumption is that we'll do another 500 hectares next year. The aspiration is 5,000 hectares. I do not anticipate that will take 10 years. I would expect that we can halve that time. But again, we're talking in the only knowns we have here is that we have the natural resources. The timing is up to us, and that will depend on lessees, though.
Okay, and one final one on the macadamias. Does the lessee, what sort of capacity do the lessees have that you're talking to? I mean, could they do 1,000 hectare chunks, or is it going to be around that sort of 500?
Yeah, no, we're interested in talking to institutional scale lessees, and those 1,000 hectare chunks is actually probably a minimum hurdle for institutional scale investors. So, yeah. Okay,
and I'm being a bit greedy, but I might have one more if I may.
We'll indulge you.
Thank you. Just the first half earnings. I mean, your 6.6 You double that, you're at 13.2. You're sort of guiding to 11.7 for 21 AFFO. I mean, you've got a little bit of dilution coming through from morale, but not that much. You've got the JBS guarantee coming through, lower cost of debt. I mean, is there any reason why the second half would be softer than the first half?
I'll just hand this over to Tim Sheridan, James.
Yeah, thanks, James. No, I mean, the FFO we put out is what we think we're going to achieve. The first half, as you pointed out, did have the Morel Almond orchard in it for the full period. So if you drop that out, our target is our target, and that's what we think we'll achieve.
Okay, but do you think the second half will be weaker than the first half?
Yes, that's right. Slightly weaker because it's got Morel in there.
So that it's Bryant here again. That weakness is occurring because of the transition from a high yielding almond asset, and it's going to take time to transition to the ramp up of the macadamias as we sign on lessees. So thanks for that, James. I'll now just move to some other questions. So there's some questions from a mini shareholder, but reading the questions, a very astute shareholder. Questions are regarding the macadamia industry. Is water a concern in the Maryborough area? Not for us. We have sufficient water entitlements to do the developments that we're targeting there, and the river itself is very reliable. It's a really good region to be expanding macadamias. And then a question about supply chains in agribusiness, and there's a question. This is from the same questioner, and also from another investor has a similar question regarding processing. First of all, I've got to emphasise that that we will be leasing these orchards out, and the decisions regarding processing and marketing will be made by the lessees. At the moment, the existing orchards the mature orchards owned by RFF are leased to a fund, which has, I think, about 300 investors in it. That lessee is managed by RFM. We actually manage the orchards, and that's why we've got the experience in this industry. That lessee, it has its macadamias processed by a cooperative. It's the largest cooperative in the industry, a very efficient processor and marketer of the nuts. So that arrangement works very well for that particular lessee. What occurs with the other lessees will be up to them. There was another question here. I'll just finish with this, and I'm not going to hand over. There's a question coming in from Jonathan Snape, but one moment, please, Jonathan. There's a question, is if the price dropped by 20%, what will that look like, and the payback period? Again, that would not alter our arrangements. It would reduce the profitability for the lessee. But what you find in these commodities is that low prices make high prices, and the reverse. But what you see in nut crops is because they actually have such a long time to build capacity, you see prices move in a sine wave as opposed to perhaps, say, an annual commodity like wheat, which has a much more volatile movement in prices. But anyway, if prices did drop for a period by 20%, then the lessee would experience less profitability, but then they would see a recovery, typically as the freeze on extra capacity tightens up supply. Okay, now Jonathan Snape, I'm going to hand over to you. You've been taken off mute, so your question, please.
Yeah, great. Thanks, David. Thanks, guys. Can you hear me okay?
We can. Thanks, Jonathan.
All right. Look, just three questions, actually, if I can. First of all, just on the first half revenue, it looked like there was quite a bit of the surplus water sales coming through in the first half. I think it was up near $2.8 million. Have you guys completed your sales program of the surplus water assets or surplus water entitlements for this season, or have you still got more to come in the second half?
No, it's all done. It probably, there's
Great.
a small amount that's not material, but it's basically all done.
Okay. And look, just following on from that, I think when I went through your little map in the presentation that has where you expect the revenue to fall in terms of rental income by commodity, it looks like it's actually up about $1 million from the numbers you put out back at the full year number. Just kind of wondering how come that's not falling through to AFFO. Is there some other cost coming up against that? I'm assuming it must be linked to the JBS component, but just trying to get some clarity on that.
Jonathan, James Powell here. The numbers on the map previously presented didn't include rental income from plant and equipment, but of course they're always counted in AFFO. The slide has been updated to show the revenue from plant and equipment and is still counted in AFFO.
Okay. So that would have come through as other revenue before, is I guess what you're saying.
Yes, that's right, Jonathan.
Okay. And look, just finally, historically, you guys have given a pretty good table on where you expect your capital deployment to go, not just through the next half, but also a couple of years out. And I understand, obviously, the Macadamias throws a little bit of a spanner in the works in how you can account for that or show it to us. But what are your expectations in terms of committed capital for the second half of 21? I think when I went through the notes, all I could see was commitments for the water that you've already announced just a month ago, and some property. But is there any way to give me an idea on what you expect to actually deploy in capital over the next 4 months?
We can, Jonathan. That information to which you refer was previously presented on 2 slides, and we've simply combined it onto 1 slide, which you can find on page 24.
Okay. All right. Thanks, guys.
Thanks, Jonathan. We've got James Ferrier coming on soon, but I'll just answer another question from an attendee, which is how worried are you with inflation and potential rate increases that might ensue down the track? Would you describe RFF as anti-fragile with regards to inflation? So it's worth understanding the nature of commodities and agricultural commodities in particular. They are a very good hedge against inflation. Historically, during periods of inflation, you will see, if you actually think about where inflation comes from, 50% of it, 50% of the CPI, the last time I looked, came from commodities. Agriculture makes up a large part of that. Food costing more is what inflation is. And so if food is costing more, the producer is being paid more, the producer can pay higher rent. And we capture that through the rent review mechanisms and inflation indexation mechanisms that we have in our leases. So in fact, historically, agricultural assets have been a wonderful inflation hedge. That's not to say, though, that if we see interest rate increases that we would not see, well, I would expect we would see volatility in the valuation of RFF while the market appreciates and readjusts to higher interest rates. So I think that answers that question. So now I've got a question from James Ferrier. James, just bear with me one moment. James, you've just been taken off mute, so good morning.
Good morning, David. Can you hear me okay?
We can, thank you.
Okay, great. Thanks for your time this morning. First question's around the cattle property revaluation. Again, I think Tim mentioned of the 7.8 million mentioned on the in the slide deck, 7.1 million relates to Rewind. Can I just confirm that first of all?
Yeah, that's correct. And I'll hand over to Tim now to answer the rest of your question, I expect.
Yeah, thanks, James. Yeah, The increase on Rewan, it was mainly driven by a general market improvement. It wasn't productivity improvements. Rewan had a tougher year, so that development program did somewhat slow, but now they've had good rain, so we'll get the developments back underway on Rewan. But it was mainly market increases.
Yeah, okay. And I think that's at least the second, possibly third revaluation gain since the property was purchased for $32 million, several years ago now. So, I guess while you say there has been a pause in the current period around the underlying productivity-driven revaluation gains, the current carrying value is still materially above the level at which you purchased it, most of which is due to productivity gains. Is that a fair assessment?
Yeah, that's right. That's right. And I mean, the pause in the productivity, it's just the nature of the capital developments going on that property. We're converting country to forage crops and lacuna, and they require moisture at the right time of year to get that underway. So it was just the season didn't pan out this year on that specific property. But that being said, as David mentioned in his presentation, the likes of Natal and Comanche, those developments are progressing ahead very well because they've had better seasons, or the developments involve irrigation water. So it's all going well. Rewan, but did have less developments this year.
Yeah. And on a similar topic then, I mean, so it's sort of, what's that, $50 million now for Rewan versus a purchase price of 32. We haven't seen the same quantum of revaluation gains across other cattle properties in the portfolio. Some of them have been acquired more recently, of course, but where's your confidence level at that you can extract similar sort of uplifts across the portfolio, or is Rewan a real outlier?
No, in terms of the productivity improvements, we think we can achieve very similar levels to Rewan. The Rewan property, but as you correctly pointed out, it was purchased first, so it was purchased for the cheapest price on a dollars per AE basis. So, the productivity improvements, we're very confident in rolling that out across all of the properties, but they're starting from a higher base. But they're still, I think as we get another round of valuations done this year, you'll see very similar sort of step-ups in valuations.
Okay, that's great. And Tim, while you're at the floor, maybe you or possibly back to David, but 5,000 hectares of macadamia development. Do you have visibility and options, ownership, etc., over the water requirements for that now, given your recent purchases, or are you still in some way short water if you're heading towards 5,000 hectares?
It's David Bryant back again, James. Yeah, we've got the water now for the 5,000 hectares. That's not to say that we would not acquire more if the opportunities arose, and we actually, we're still actively looking for additional water entitlements. They're a good investment, and it's their natural resources that we can harness for either macadamias or cattle. So that slide where I showed the forage crop, or on Comanche, we've got centre pivot irrigators going in on that property, a property nearby. We've just done a whole lot of work on that property, and the centre pivot systems will go in there. Cotton properties, there's development that's continuing on those. These are all about adding water or harnessing the water resources, and acquiring more of those natural resources to harness down the track is a large part of the strategy. And I might just add on the Rewan on cattle values, land values, they've gone up a lot. We've been active in the market because, particularly acquiring that land along the Fitzroy. I think we're coming up to about the 8th property along the Fitzroy now, and we've also been looking at other properties in central Queensland and right around Australia. Cattle land values have gone up a lot, and I suppose I'm grateful that we're set. We've set ourselves up with natural resources that we can now go and invest in, and the stuff that we've got to buy for those to harness those natural resources are things like pipes and steel, that are not affected by the asset price inflation that we're seeing in agriculture, but in all asset markets. So I think we've got ourselves into a really good position by moving early, and we really, I think we really harnessed the COVID lockdown to do that. We still had people out there active in the market acquiring properties, and so as I said, we're set, and that's a source of relief. Now going to hand over to Pete Davidson. Pete, I'll tell you when you're off mute. We've just got to do some IT things. I'm just working furiously here to bring you online, and it won't be long. In the meantime, we can perhaps see if there's other questions. All right, I've got no other questions. So we're just one moment, and we'll get Pete Davidson on the line. Okay, Pete, we're just having some difficulties. I'll just see if there's other questions that are outstanding. I'm going to hand over to Tim while we get you offline. So Pete, just be conscious. I'll let you know. I'll interrupt him if you come online, just so that you know that you're no longer on mute. But Tim, thank you.
Yeah, thanks, David. Just a very quick question. We've been asked how much of our revenue is linked to CPI. Directly, about 50% of the portfolio is linked directly to CPI. The other has fixed indexation mechanisms.
Okay. And I'll just add to that. Pete, you're off mute, but I'll just round off on Tim's. The important thing is that the other parts of the portfolio that have fixed indexation, a lot of those also have rent reviews, and during periods of inflation, you'll see rising agricultural land values, and that'll be captured in the rent reviews. Now, Pete, you're off mute, and good morning.
Okay, good morning, David. Just a quick one. I don't know if you've already spoken about this, but the issues around the lessees for the macadamia properties. I think in the past you've said you like to use like fully integrated purchase vendor type operators as lessees. Can you just, I don't know whether you've spoken about that, but can you just expand on your sort of search process there?
Yeah, thanks, Pete. We actually haven't covered that. It's a good question. Yeah, so we are very attracted to investors that are actually in the business of processing and marketing specific agricultural commodities. So, for example, a wine producer, they will typically make the wine and then market the wine. We have other substantial lessees such as JBS, Olam, Select Harvest. Again, they process their nuts and market them. We have had discussions with people of that nature in the macadamia industry. It's a much smaller industry. It's a tiny industry compared to the other nuts. That said, it's an industry that's growing more quickly than any of the other agricultural commodities. For example, I'm digressing just briefly, but it's just worth mentioning this. Sugar demand and consumption globally is growing at 0.5% per annum. That growth is, of course, mainly occurring in developing nations who are taking on more calories, while we in rich people are trying to shed them. The macadamia industry is growing by 9% per annum, and that's as people in rich countries and developed and middle income countries are seeking higher quality diets and tasty foods. But the macadamia industry still is quite small, and the number of processors, the universe of processors and marketers is quite small. So we are looking further afield, and we will work with institutional scale investors to develop the orchards, but then work with them on processing and marketing using our existing connections within the industry. But you can be confident that where we're working with institutional investors without existing capacity, they have well-developed plans for both those tasks, both processing and marketing. I hope that answers your question. All right. I think that we have run out of questions. No, we've got another question. Okay, just one moment. No.
Yeah, sorry, just a question on almond prices and what impact that will have on rent reviews for the portfolio. Yeah, you're right, almond prices are down on where they were, but I guess you just have to look at the Morale sale. That occurred at about a 20% premium to book value. So, and across the almond portfolio, only a small percentage has market rent reviews in the leases. So I don't anticipate any significant impact from the lower almond prices.
Okay, and one last question from our mini but astute shareholder, which is, do we have any expansion plans for or plans for acquiring more land, more macadamia land? No, we don't. We've got enough to do 5,000 hectares, and I think actually we've got more land. We could do more than 5,000 hectares, but we've got enough water to do 5,000 hectares. Just some other questions. Would we expand to central Queensland, places like Emerald? No, we looked at Emerald in detail, and we weren't particularly happy with, particularly with the. It's a much more arid zone, and you get into things. Our agronomists and horticulturists are measuring vapor pressure deficits at the leaf surface area. And they did this in Emerald and other locations and concluded, they did the calculations for water consumption and said, let's not go to Emerald. And there was another question about land values for macadamia orchards or for land values around the Bundaberg region where we currently have orchards. The question is, do we think they're overpriced? The land that is being acquired for macadamia development there, I don't think it is overpriced. People are paying around $30,000 per plantable hectare, and if you can get it for that, it stacks up, and transactions are occurring at that level. And then one last question from James Struce, which was, can I comment on our appetite for acquisitions at the moment? I made some comments before about cattle land values and some of the prices being asked and also prices at which some cattle properties are transacting at are eye-watering, and it's enough to ruin my appetite. That said, there are still opportunities. It's a big continent, and it actually has an island to the south of it. So it's a big country where there is lots of opportunities if you look in the right places. And so we're continuing to jump on planes and go to far-flung places to look at those opportunities. And we will do that continuously, whether we're buying or selling or doing nothing, because it's how you learn and it's how you see where the opportunities are. But at the moment, I think that Rural Funds Group has enough on its plate. So any transformational acquisitions are highly, highly unlikely. I think that we have enough to do with the macadamia developments, and I really want to emphasise the cattle developments are really substantial because we have a lot of water, we have a lot of land, and we can improve the productivity of a lot of cattle properties. And that'll be a big chunk and a big source of development and increased revenue for RFF. So I think that's, I'll wind up the question and answering in the presentation now. It was a really interesting set of questions. So I thank the attendees for your participation, and I thank our shareholders for your interest in the Rural Funds Group. Good morning, everybody.